quick announcement, I just made a brand new Discord server. If you guys want to join the community, ask me questions directly, or come along with me through this whole journey, make sure you hop in. I'll leave the link in the description, and thank you. For real-time updates on my trades, entries, and portfolio decisions, don't forget to follow me on Twitter. Make sure you like the video and subscribe, and let's get into the video. Welcome back to my channel, everyone. I hope you're having a great day. This video isn't going to be a price update, but it's going to be about the portfolio I am going to build once we hit the bear market bottom. This is a blueprint with mock allocations, targets, and strategies. This is also going to be a 2 to 3 year setup, so it will take time, but this has the potential to truly change your life. So the first part of this video is going to be a portfolio breakdown, okay? So this is a pie chart of the portfolio, and here I have a list of all of the assets I'm holding, and we're going to go walk through this one by one. So the first is the most important. It's Bitcoin. Now, Bitcoin is going to be the rock. All right, it's going to be the cornerstone of our portfolio. This is what we are going to build upon. Now, this will not only be the main part of our portfolio, but it will also be a metric we can follow to correlate everything else together, or most of the portfolio. So we'll use Bitcoin as a metric to follow, and when it gets in the bear market and it's at its lowest lows, we will be accumulating almost everything else at the same time, because everything is heavily correlated here. So next is an ETF called BITX. Now, BitX is literally just Bitcoin, but it is a 2 times leveraged version of Bitcoin. So if you put in $1, it's worth 2. Now, this comes with more risk, but I want to take risk. I want to make more money, and it is also Bitcoin. There are downsides to a 2 times ETF. They do degrade over time, but we will be accumulating at the bear market lows, so we won't have much to worry about. But once we start getting up into those high numbers and we have 30% pullbacks, then things will get iffy, but we'll figure it out from there. Now, the reason I decided to do a 2x is because I want to give our portfolio a little bit of a boost, a little bit of an injection of cash, and I think it will pay off, even though it's quite a big allocation compared to everything else, but I think it will pay off greatly. Now, next is going to be spot Ethereum. Now, you can hold this in an ETF, like a normal one, or spot. Do what you do, whatever's best for you. But for me, I'm picking Ethereum because it's always an underdog. It goes down a lot compared to Bitcoin. It's always forgotten about until it actually starts running. And I think that Ethereum is just another cornerstone. It's an obvious choice, and I think it will have a lot of upside potential. Okay, next is going to be ETHU. This is literally just a 2 times ETF of Ethereum. It's literally just leverage. I mean, you guys can do this your own way. If you want to do 5x, if you want to do 10x, you can go onto an exchange or whatever and do that. But for me, I like the 2x. I'm comfortable with it. I've been using it. And remember, all it comes down to is your risk management, because 2x can be degenerate if you put a shitload of money in there. All right, next is ETHU. It's pretty straightforward. It's literally Ethereum, but it is a 2 times ETF. It's literally just leverage. This is going to be 6% of our portfolio. So next is going to be my one altcoin I'm going to pick besides Ethereum. It's going to be Solana. I don't like Solana. I don't like meme coins. I don't like its entire ecosystem, but I'm still going to buy it because I know it's going to go up. It has a strong community. It's going to go down tremendously, and I know it will have a lot of upside potential if anything doesn't happen, if it doesn't become Terra Luna or anything like that. So we'll keep our eye on that. For now, Solana will be our one altcoin besides Ethereum. Next is going to be MSTR. Now, we can literally just think of MSTR as a leveraged Bitcoin ETF as well. It's just another instrument that's going to give us leverage within this cycle to accumulate more Bitcoin at the end of the cycle once we sell everything. So MicroStrategy, everyone knows what it is. Michael Saylor accumulates Bitcoin. That's all that matters. Now, MSTR has a leveraged ETF called MSTU. It's literally just a 2 times leveraged version of MSTR. It's pretty straightforward. You can see a pattern. With every allocation I have, I'm trying to use just a little bit of leverage on top of it just to give us a boost. I think MSTR is going to fall drastically down. And when it does, I think it's going to be a generational play to buy it. And I think it's going to be amazing. I think we're going to make a lot of money on that. So next, I'm going to pile these 3 together, which I'm sure you guys know what these are. These are Bitcoin miners. And for me, this is just another leveraged instrument to acquire more Bitcoin because miners have a lot of upside potential. They run with Bitcoin, so it's kind of a no-brainer to accumulate them at a bear market bottom. And I think we're going to make a lot of money with these. And at the end of the day, we can pretty much take all of this and we can take this and we can just say basically this is part of our Bitcoin allocation because it's basically the same. They're just instruments to acquire more Bitcoin or a leveraged way to get Bitcoin. So once we get into gold, that's where the portfolio changes. I want this to kind of be, I want it to be a less leveraged, more safe part of our portfolio because Bitcoin is our rock. But this stuff is going to just set us up, keep us safe when there's big drops, even though it doesn't really matter. A part of me just wants to have a safer, quote unquote, safer asset in the portfolio. And I've been wanting to buy gold for a long time, and silver, and the S&P, because I've been full into crypto. In this portfolio, in this new cycle, I want to do something a little different. So we just have some small allocations into gold and junior gold miners, silver and junior silver miners. And then we have the S&P 500, which is going to be 6%. And then we have SPUU, which is a 2x leverage of the S&P. So that's pretty much it for allocations. Okay, now I want to cover why this portfolio, okay? Bitcoin is going to be our metric for everything in this portfolio. Altcoin, other than the S&P and gold, which they are correlated, but we will just say altcoins and all our Bitcoin instruments are going to be heavily correlated to Bitcoin, and that's what's going to matter the most. So we'll use Bitcoin as a metric for everything timing-wise. When Bitcoin is at in a bear market and at the lows, we will be accumulating everything related to Bitcoin at the same time. So historic drawdowns I have here, okay? We have 2011, 2014. We're going to cut these out, okay? We don't even need these because they're unreliable. We want to focus on the last 3 cycles here. So I have a projection here of about 58% we are going to go down in this bear market, and that's from a price of 160, which is on the higher end for me because I'm thinking 140, 150. I did 160 just in case. So that would bring us to about 67,000. And the reason I picked 58% is because Bitcoin is very different than it was before. I didn't pick 84 or 77 because Bitcoin is a much mature version of an asset than it was in 2018, especially 2018, 2022 less so. But it's much different than it was now. Bitcoin has institutions, it has ETFs, it has companies buying it, and I'm not saying that they won't dump their bags, but I'm just saying I think that this drawdown is going to be much less than it was in 2022. But that is still yet to come. That is just a projection. It can be changed. But I just put this here just for us to have a rough idea of what we're looking at. Now, timing and accumulation. So we've been looking at this chart for quite a while just to give us an idea of where we are in the bull market. But I'm going to use this as a rough fractal and an overlay to show us where we could possibly go down to. So I grabbed this fractal from 2021, 2022, and I was just messing around with it. And I just wanted to put this here to give us an idea of what our buy window would look like. So we have about 581 days to accumulate. And the months I have here are August 2026 to March 2028. Now this is rough. It could not look like this, okay? But the importance is we have a rough idea of when we actually want to start buying. Now we can DCA within this area, or we can do a lump sum. We could DCA some things like Bitcoin, and then we could do lump sum in our lower percentages like gold and the S&P and maybe the miners. Now you might be wondering, why is this stretched out so far? And it's because not that the bear market is going to last this long, because you can technically say that the bear market will end around here or around here. But this is not the bear market. This is more of a, well, it is the bear market, but this is more of a, we will be accumulating from here to here. Even if the bear market ends right here or right here, it doesn't matter. We will be accumulating from this date to this date. So now I'm going to show a mock portfolio and a projection. So if you remember the pie chart, we have a percentage for each asset. Now, if we had $10,000, this is how much it would be divided into with our percents. So it's fairly straightforward. We have our percents here. We divided them how we want to divide them, and this is what a $10,000 portfolio would look like. And then we have here a 100K portfolio, and it would be divided like this. It's very straightforward. And for me, this portfolio is designed to hit my goals. And I know that people don't have the same goals as me. They want to take more risks. So I want to say viewers should adjust their weights accordingly depending on their risk tolerance and their starting capital. Because if you have $10,000, maybe you don't want to buy any of this. Maybe you want to put more of all this as possible money into something more high risk like MSTR or some sort of leveraged ETF. Same goes for 100K, because even though some people would consider that a lot of money, some people wouldn't. If they don't want to have this slack. Maybe they'd think of this as slack or holding their portfolio back because they want to take more risk. So I say if you have less money, definitely take more risk and design it based on your goals. So we looked at the mock portfolios. Now I want to give a rough projection of what this could possibly be worth. So here I have a 4x as the peak of the bull market, and then I have a 2.17x as a moderate. Now for me, I would honestly consider a 4x on this portfolio more than moderate. I think that is the low estimate, but we're gonna be very pessimistic and realistic here. So we're gonna say that's our peak, but realistically, I think this is the base, and I think this portfolio alone could go to 60 grand. But we'll keep it moderate. We'll say the peak would be around $40,000, which is great. A 4x is excellent, but I know that a lot of people wouldn't be happy with that, and they would want a 10x. They would want a 20x. So adjust accordingly. Add what you want to the portfolio. It doesn't have to be the same as mine. And the same for the 100,000 portfolio. I honestly think that 340 is a little conservative, even though we have it at the peak. I think this could easily go to 500, 600,000, and it all depends on what you want, as I keep saying. Now, this is not advice. This is a framework. This is a structure of a portfolio of what I plan on doing. And I am going to be documenting this in a weekly series. So my goal is to make at least $1 million by 2029. I think it takes at least 3 cycles, Bitcoin cycles, to make $1 million. I think your first cycle is a learning mistake. Your second cycle is to execute the plan and sell at the top. And the third is to compound everything you've learned from the last 2. You do it correctly and you change your life. And this is the third cycle for me, and I cannot wait. Remember, first cycle, you make mistakes, you lose your money, you learn. Second, you execute. Okay? Everything you've compounded, you put it into the third, and you will change your life. I will be tracking this live every week. I'm going to do 1 video a week, okay, from the bottom of the bear market, and this is going to be a series for our channel. And once the accumulation begins, I'll start the series, and I will track this live, and I'm going to make $1 million. Mark my words right now. We will do it. I hope you guys can make what you wanted to make. I hope you have a more conservative goal for the money you have, and I hope this was helpful. And we're going to do it together. I hope in the bear market I could have some loyal followers and loyal subscribers who watch and follow with me, and we get rich together. That's my end goal. And I know this was a different kind of video, but I think it's important to lay out the groundworks before the bear market actually comes. In tomorrow's video, I'm just going to go back to normal, but I do plan on having my bear market portfolio, because this is what happens when we reach the bottom. But I also have a portfolio for once we're actually going down, so we can make money on top of there, so we could put more once we actually get to the bottom. All right, we're not going to sit there and cash the whole time. So make sure you subscribe. If you want to follow along with this journey, please subscribe. Please turn on notifications, like the video, comment, join our Discord, DM me if you want to talk with me or ask me questions. And see you tomorrow, guys.